Alright everyone, welcome back to the channel for another update on Kadena. In today's episode, Bearish Divergence, I'm going to be updating you on this hidden bearish divergence which is currently playing out on Kadena. I'm also going to be showing you the charts that we were looking at before, giving you a brief update on the market structure, and then I'm going to be talking about a interesting fractal I've noticed and the momentum indicators. There's a lot I want to go through today, so let's just jump right into this. Now, before we do start the video, if you are a seasoned veteran of my channel, then you would have heard me talking about the hidden bearish divergence that was playing out on the daily time frame for Bitcoin. If you're new to the channel, warm welcome. We were talking about this playing out over on Bitcoin. You can see there is a very strong level of hidden bearish divergence playing out on the daily time frame. We're already starting to solidify this breakdown as we are coming down. Now, what's interesting is you can actually see that this is now playing out over on Kadena. So hidden bearish divergence is where you've got highs, lower highs, lower highs, lower highs in the price action, but the oscillator, which we're looking at on the relative strength index, has highs, higher highs, higher highs, and higher highs. And this indicates that as the RSI goes up while the price action is going down, the market is getting weaker and weaker and weaker. The RSI is getting more overbought even though the price action is moving down, and this is an indicator showing extreme weakness in the market. Now, for the RSI to be invalidated, or rather for the hidden bearish divergence to be invalidated, the hidden bearish divergence has been playing out since the 6th of June over on the price action. So technically we can actually draw this up to here as a line of best fit. So you would not be invalidating Kadena's hidden bearish divergence until you take the roof off and break above $2.10. Now, this is not something that I think we're going to be able to do. I think it's very black and white. You know, I've talked about this before. I love, you know, when we have these dead cat bounces, I love removing the noise, going over to the weekly time frame, heading over to the Heikenashis, and when everyone's talking about, you know, this is the bullish bounce, the $1 price target that I've been calling for is not going to come into play anymore. You know, switch over to the weekly, switch over to the Heikenashis. Where is the bounce? The bounce is non-existent, and that is because when you look at these Heikenashis, it smooths out the dead cat bounces. When we do look at the Japanese candlesticks, you can see we have fake out after fake out after fake out after fake out. And what's interesting is every time you have these fake outs on the weekly, we had a fake out over on the 9th of May, up to $3.45. The next fake out was all the way down here at $1.88. The next fake out was here at $1.86. And the fake out that we had this week, which in my opinion is 100% very clear cut to be a bull trap, this was getting topped out at 170. So what do you notice with this over on the weekly time frame when we're not looking at the Heikenashis? Lots of people got suckered into these relief rallies, bounce after bounce over bounce. But if you just look at the tops on the weekly time frame, we don't even need to look at the Heikenashis to show you that this is just another dead cat bounce and the trend has not been subsided whatsoever. So this is a very, very important technical over on Kadena that's playing out right now. Very plain, very simple, yet very effective. And this is what is pulling the price of Bitcoin to the downside right now. We've got lots of momentum indicators, lots of oscillators that are pushing to the downside after the most recent bearish retest. And I definitely think this is going to be what we need to push Kadena down to the next level to the downside. So let's move back over to our charts that we were previously talking about. So, you know, since my last video, I was saying that in my opinion, we are really getting close to solidifying that bull trap. And if we do look at the daily time frame, you can see the relative strength index has literally been stagnating since the 15th of May. So we're basically, you know, while the price action over here on the 15th of May was up here at $3.45, and we were able to subsequently have a 61% capitulation, the relative strength index is just as neutral as it was before we had that 61% correction. So I really don't think it's outlandish for me to continue holding my guns, or should I say flexing my guns and, you know, sticking with what my original plan was. And once again, this is what I've been calling for months now. Kadena is going to $1. There is also a price target down here at 89 cents, and there is also a price target down here at 79 cents. If you're new to the channel, warm welcome. I've been calling for these breakdowns on Kadena since 650. I've been patiently sitting on the sidelines. I do like Kadena. I have read the white paper. I find the green proof of work network consensus mechanism very interesting, and Kadena is definitely definitely something that I'm going to be looking to pick up when the bear market lowers in, but I'm an objective trader. I leave my emotions at the door, and the bottom is not in. The chart looks terrible, and I'm telling you, we are going to lower price targets. On the daily time frame, we have just retested the EMA ribbons, and I'm going to focus on the EMA ribbons in a second because there's actually something I want to draw from on this fractal that is happening between these data points and these data points. We'll get into that in a second. But as you can see, since the last video, a whole lot of nothing has changed. Has anything changed in the market structure? No. When we were updating it back down here, this was a high, this was a lower high, this was a lower high, this was a lower high, and once again, what people have been getting out of bed for the past couple of days was once again another lower high. And you know, I'm not necessarily saying that we are going to rocket to the downside in the next day or so. I do find it likely that we could lollygag over the weekend, potentially getting ready for that Monday breakdown. If you don't know, we have the US Consumer Price Index, or CPI, information coming out. I believe it's on Wednesday, and we typically always dump into these CPI reports. So if I had to hazard a educated guess or a hypothesis, I would say we would be breaking down round about Monday to Tuesday before the CPI meeting on Wednesday. That is going to allow us to price in the increase in the CPI, which I think is going to be happening. So lots of things going on. Definitely keep your eyes out on what's going on next week and the next couple of weeks. We've also got GDP growth reports, and we've got another FOMC meeting coming all in the next 3 weeks. So it's gonna definitely be a crazy show for the markets in the next couple of weeks, but I would definitely be hedging my bets to the downside, just like I have been for a while. So once again, when we did last update our price prediction, you know, we were right here. Technically, we were all the way up here at $1.94, and this major prediction that we were calling for $1 is still in play. As you can see, since we were talking about this, we are still down almost about 19%. We're down about 19%, and you know, since we updated this, because I was originally calling for $1, but because of the markets, because of everything that's going on in the stock market, the dollar, I have also presented another bearish price target, which is obviously down here at 79 cents. If you're a veteran, you would have known that I've been talking about this for a while, and we're still down 10% since that prediction. So I really don't see anything's changed. Now let's talk about what is going on with the fractal, and specifically I want to talk about the bearish retest over on the daily EMA ribbons that we have been witnessing for the past couple of days when we are talking about this fractal. So this is the fractal in question, and right off the bat, I'm going to clear up the EMA ribbons. I'm going to remove the RSI just to make everything clear cut, because everything that I want to talk about is going to be in the price action. We don't need any fibs, we don't need any trend lines. We're just going to be looking at the raw data and looking at the oscillator, our momentum indicator down here, which is the squeeze mom. So let's clear these up to make it a little bit easy. Now what I want to talk about is, once again, the fractal. Let's just draw it out. So let's just say this data point over here, where this white line is presented, is A, and this line over here is B. So the move that we've had from A to B, in my opinion, is playing out as the same fractal as if this line here was C and this line here was D. This is the exact same fractal that we've got playing out. I'm not talking about like an A, B, C, D, Elliott wave correction. I'm talking about the two lines. This move from here to here, and then this move from here to here is exactly the same, and let's talk about why. So right off the bat, let's clear up the chart a tiny bit. What did we do after we had a bearish pattern playing out? We had a massive bear flag breakdown. We had a very, very sharp capitulation into this horizontal line, which is where the fractal starts to play out. Now, you can see, what did we do after this redistribution phase? We had a breakdown. Also, you can see here, we had a bear flag, just like we saw over here, and we had this bear flag breakdown, massive capitulation into this fractal. Now I'm going to delete the squeeze mom just so I can stretch this out a tiny bit more. What did we do after we had the capitulation into the start of the fractal? And like I said, I mean, you could even move this back and say, hey, the fractal started playing out from this capitulation to this capitulation. I'm just going to keep it how it is, though it doesn't matter too much. So as you can see, start of the white line, what did you do after the capitulation? You had a big, massive run to the upside. This was a very healthy bounce, and as you can see, you know, it doesn't look too much over here just because the price is quite beat down. But you can actually see this was a 147% move. This was a 136% move. So as the price action's going down, it would be better to probably look at this on a log scale, but I don't want to I don't want to bend or remove the data in any way. So as you can see, these two bounces that we had were exactly the same in both of these fractals. Breakdown from a bear flag, run to the upside. What do we do after this? Let me get rid of these. Okay, I need to delete them. So you had the run to the upside and you started to capitulate to the downside. This was actually playing out as a massive M pattern breakdown into a mass capitulation. What do we have over here? Once again, massive run to the upside, breakdown into an M capitulation. Now what you will notice is with this capitulation, we did not make it back down to these lows. In fact, it took us a very long time to make it back down to these lows. And as you can see, the lows are down here on the 12th of May. We came back and retested them, but we haven't capitulated below them yet. So once again, a lot of similarities playing out with the two of these. What you did after the M pattern breakdown is you had one spike to the upside, which was a lower high. You had two spikes to the upside. This was a lower high. It's hard to tell, but this was actually a slight lower high from here. And then you had the final run to the upside. You created a triple top formation before cascading, breaking below the lows and going on a massive run to the downside. What did we do over on the price action after we had this M pattern breakdown? We had some sideways capitulation. Well, if we zoom in, you can see we had a run to the upside. You had your top in the lower time frames, breakdown. You had a double top up here, which was a slight lower high from the previous data point, breakdown, triple top formation, and then you started to cascade. Sure, you're lollygagging a little bit. Did we lollygag over here before we actually had the final breakdown? So the lows were right here, and the lows of this trend are right down here. Oh, it's actually right down here. Yeah, it's hard to see. Down here at 136 of the lows. And yes, we have solidified this triple top structure. So I'll clean it up just so we can, once again, we know that the start of the trend is the exact same. So let's look at what's happening towards the latter half of the trend. As you can see, triple top formation right here, just drawing a line of best fit. And then you had the capitulation. Before you took out the lows down here, you did have a somewhat sizable bounce once again to a lower high. This was a 15% move back up to the upside. Yes, you did lollygag. Yes, you bounced a few times. You bounced like 3 or 4 times before you finally did take out the floorboards after that triple top structure. And if we do look at this triple top that we've got going on right now, you can see we have lollygagged before breaking below the lows down here. You have had one run up to the upside, a top, you broke down, you had another run up to the top, which was once again something reminiscent of a double top lower high structure. And it is very possible that we could do something like this, you know, bounce up to 158 one more time before taking out the lows. I think these two fractals look exactly the same. Let's put it in a log scale and see if it would have been better to look at this on a log scale. I think it kind of takes away from... But as you can see from this data set, I mean, they look the exact same. They've both got the same floor. They've both got the same euphoric run to the upside over here. You know, after the capitulation, run to the upside. And then you have that M pattern breakdown here, M pattern, here, M pattern, and then once again you've got a 1, 2, 3 triple top structure, 1, 2, 3 triple top structure. You break down before you take out the lows down here, you lollygag for a prolonged period in time before you rocket to the downside, bearishly retest the lows, and then head back down. So what do I think is going to be happening on Kadena right now? I think the exact same is going to be happening. I think we're probably going to do something like this, where we are going to lollygag maybe a tiny bit longer up until Monday. We are going to capitulate probably either today or tomorrow, like I said. We're then going to bounce back up to 134. Once again, people are going to be saying, hey, can you update Kadena? It looks like we've broken bullish again, as we are coming up and bearishly retesting the floor. And then in my opinion, we're going to trickle all the way to the downside. Where do I think we're going to come down to? I think we're going to come all the way down to $1. We might have a bounce from $1. I'm not saying we're going to go all the way down to 80 cents and then just be done with it. I think it's going to take its time. As you can see, when we do look at the market structure, it does not move down in a straight line. You have dead cat bounce after dead cat bounce again and again and again and again and again, and we're doing the same over here. So that is the fractal. Very interesting. If I do pull back up the let's see, let's pull up our squeeze mom, because I want to show you the strength in the market when we did have this previous fractal playing out. So after you had your run to the upside, you can see we had a very, very flat period of bullish growth over on the squeeze momentum indicator. And in fact, it was only light green, which is indicative that bulls are in control, for 4 days before it started to turn dark green and head back down to the downside. And as you can see, I mean, with this run to the upside, we didn't even switch bullish. Like, look at this. There was not enough momentum coming in to push us to the upside. And what we had after this triple top structure, so you have a triple top over here, right? You've got a triple top, where was it? Triple top over here, finishing right here, actually. What you had after that triple top was a tiny, tiny bit of momentum coming in for the last run to the upside before you do head down. This was the quote-unquote bullish momentum that we had coming in for Kadena. You know, this was completely flat and it was absolutely stagnating. You know, this run to the upside was absolutely not supported by enough volume that it needed to be supported by for a move to the upside. And subsequently, I really do think in the next 24 to 48 hours, Kadena is going to be moving to the downside. You can see, once again, you know, the more we record this video, the more Bitcoin and Kadena are moving down. You can see this hidden bearish divergence is playing out absolutely beautifully over on Kadena and over on Bitcoin. So, you know, once again, I'm not a perma bear on Kadena. I do like the project, but I am looking at this objectively, and there are no bullish technicals to speak of. So, we talked about the fractals, we talked about the hidden bearish divergence, we gave you a quick update on the market structure. Let's look at the oscillators as we do wrap up this video. So, you know, it looks like I said over here, we're running out of momentum. Just purely looking at the squeeze mom, we didn't have enough momentum to uptrend us, and over on the volume as well. There's just not enough volume coming in to support this uptrend whatsoever. So it looks like, in my opinion, we're about to break to the downside. In my opinion as well, looking at the hidden bearish divergence on both Bitcoin and Kadena, it looks like very, very soon, once again, either today or tomorrow. I wouldn't be surprised if it happened today, but once again, I wouldn't be discounting us to lollygag for 24 hours before we do come in to the price action tomorrow. I'm not trying to predict what's going to happen in the next hour or 2 hours. I'm telling you what the next move is going to be, regardless of whether we lollygag for a couple of hours before the next breakdown. So looking at the MACD over on the 4-hourly time frame, you can see that we have flipped bearish. There is a lot of bearish momentum coming in over on the MACD right now. Looking at the money flow indicator, this got very, very topped over at 74. Typically, when you do come up to this 80 range, you get topped, 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 and you always start to head back down to the downside after that move. Looking at the squeeze mom, you are also running out of momentum. We talked about this in previous videos, but every time you have these bullish runs to the upside, they get weaker and weaker and weaker. It is similar for the bears, but what I would say for the bears is that at this moment in time, you know, that you can very much see that the bearish runs to the downside are much more euphoric than these bullish runs to the upside. So as you can see, bears have a large amount of control right now, and the reason why, you know, bears haven't necessarily taken, you know, 100% of the trend at this moment in time over on the 4-hour is simply because when we do look at the price, we are the same price as we were from the 12th of May. So we have been lollygagging for approximately 60 days now, and I finally think this hidden bearish divergence is going to be in play very, very soon. I think we're really getting ready for the next breakdown. Absolutely nothing's changed on the higher time frames. You know, we looked at Kadena on the weekly time frames on the Heikanashis as well, and once again, it seems like there is no dead cat bounce, there is no bull trap when you do smooth things out on the weekly time frame. However, when you do head over to the daily time frame, in my opinion, just like I've been saying time after time after time, I've been updating you on Kadena since 650, and the amount of videos I've made telling you, do not get out of bed, this is another bull trap. Every single time I make one of these videos, I'm making it from a lower price target. So definitely take that with a grain of salt. That is all I've got for you for Kadena today. I hope you did enjoy today's content. If you take anything away from this video, it should be the hidden bearish divergence, because while this is a very, very simple indicator, while this doesn't look like anything special, if you do know hidden bearish divergence, especially on higher time frames like the daily and the weekly, these are very, very important, and I do think the market structure is going to be heading down very, very soon. The price is moving to the downside, but the strength of the market is getting more and more oversold, meaning that the longer we kind of lollygag into this, the more the strength of the market can continue to get overbought, and the price action can continue to become overbought as well, and we will just continue to head back down to the downside. So once again, the hidden bearish divergence, this is a very, very brutal indicator that is staring us down the face right now. This is also playing out on Bitcoin, and I think this is going to capitulate the markets within the next few days. Once again, we have the next CPI report over on Wednesday, and I do think Kadena is either going to be breaking down on Sunday or Monday into that CPI report over on Wednesday. So that's all I've got for you today, my friends. Hope you did find some value in today's content, and as always, cowboy out. Peace.